The unemployment rate rose in February, but payrolls added far more than expected. Here to talk to us about it today is Charlie Bilello. He is the research director at Pension Partners. Charlie, thanks so much for being here.
Thanks for having me.
So Charlie, we already see the S&P futures are up. We saw the labor participation rate stay at about the same. So with all these numbers, what are investors supposed to take from it today?
Yeah, I think investors should really focus on the bond market. You know, in the past week, we're starting to see bonds start to sell off and yields rise, and they're not able to hit lower yields with all this weaker than expected data. Now we have finally a better than expected data point, and we're seeing bonds sell off and yields rise. I think that can really continue here. You know, the 10-year came into today at 2.73. I think if we start to see better than expected data, we can make a quick run back to 3%. Yeah. And we're seeing that with stocks at all-time highs and cyclical stocks at, particularly strong. That should be indicative of higher interest rates here.
Sure. Yeah. And we dive a little bit more into the numbers. We saw that wages actually increased by 0.4%, which normally we see the 0.2% kind of gain.
Sure.
But the work week actually declined by a little bit. So what do you make from those?
Yeah, it's always a tough read on any particular month, but I think it's positive that you have the income growth. That's the one thing that's been missing from this rally. So if we do finally start to see wage growth, we're starting to see in the last month some increase in inflation expectations, and perhaps the Fed is finally going to get what they want, which is an increase in inflation expectations through wage growth. So that could be a net positive here.
Sure. And so a quick take from you, moving ahead, should we now start expecting some stronger economic data points?
I would just the cyclical nature of beats and misses. We're kind of at the trough level. If you look at the Citigroup Economic Surprise Index, it kind of goes up and down, and now we're at the lower end. So I would expect to start to see better than expected data going forward. We've seen that in the past few years where we've had early weakness only to trend higher throughout the year. So
spring's been good to the U.S. for the past few years.
And you know what? The stock market doesn't seem to care either way. It's been up in 14 of the last 15 non-farm payroll reports. So good news is good news, bad news is good news, and as long as that's the case, it's bullish for the markets, obviously.
Charlie, thanks so much.
Thanks for having me.
That's Charlie Bilello of Pension Partners for TheStreet. I'm Joe Deaux.